Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration. Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, as I speak, the Australian dollar is back under pressure and now tackling the level of 67.15. A New York close under this level would reinstate the downside and look towards the target of 66.60 to 66.80, seen as a major level, as beneath here would give further exposure to 64 cents. Any advances still sees resistance around 67.65 to 75. Euro continues to pressure the downside and now very much looking at the level of 109.55, a key level because if breached the market will look towards a target of 108.20 to 108.70. Overnight the US dollar index, which measures the greenback strength against a basket of 6 major currencies, took the challenge and reached its objective of 98.45 after inking in a yearly high of 98.42. This on the flip side saw the euro drop towards the lows at around 109.63. Any advances sees resistance around 110.45. Now don't forget, later tonight we do have the January non-farm payrolls number report. At present, we are expecting a stronger number of 161,000 jobs for January. Previous month was 145,000, while the unemployment rate remains steady at a 50-year low at 3.5%. The dollar yen a little bit apprehensive in taking the challenge higher. I still view the market around 110.30.60 as a potential supply zone. And I do anticipate the market pulling back to 109.45. While we see this cap at 110.30.60, then I feel the market will turn bearish. The pound is also pressuring the level of 129.10, a yearly low, and if broken, would open the way towards the level of 124 to 125, a very significant level, and the call is to the downside as the bears marry up now with the technicals, with the RSI and also MACD also falling into place. The gold outlook still slightly positive, not showing any signs of weakness over the last 24 hours. In this case, looking towards the level of 72. It needs to clear the hurdle 85 to get back towards the 7-year highs around 1,600 figure 15. Dips are seen at 57 or 1,550 as a low. Finishing up with oil, well, since the inverted hammer, we've got a strong candle coming through, but now a long-legged doji that gives a little bit of indecisiveness. Overall, though, I still feel the market is bullish, and we are looking up towards a potential target somewhere around 53, 80, 90 to maybe $55 a barrel. Still a lot of room here, and I feel that from this candle and also the technicals does give support to a bullish recovery. Well, that wraps it for today. Thank you very much for joining me, and as always, look out for the intraday report. Hope you enjoy the great start to this new day and to the new weekend.